Barb, a lot of things have kind of come as a bit of a, revelation here, and one of which is maybe underinvestment in lots of energy infrastructure. You have a lot of rethinking of exactly what we need and how to get it. Has it changed anything on the investment front for you with regard to energy, either new or old?
Well, it's interesting. I actually had some oil service and equipment ETFs that I sold late last week because I think there's a pop in oil. Oil could go higher depending what happens, particularly with Russia and Europe. As we know, they're a big buyer of Russian oil. So oil prices could go higher. But I think that we're going to see more pressure, governmental pressure to start drilling. But I think we've already seen that a lot of oil companies are opting for profitability. And we'll see how much governmental pressure will start to change that. So I think right now we still have supply issues that are really being exacerbated. So if you're long oils, you probably want to stay. I sold my OIH because I do think there's a temporary pop. But having said that, obviously oil prices and oil stocks could go higher in the short term.
Energy, again, at the top of the market, up 2.3%. Brent closes above 100 for the first time since 2014. The question is, if this settles down, then what? Right. How much is factored in terms of the demand reopening that we're supposed to be getting right now from Omicron, which has also supported prices? Yeah,
typically the market doesn't love if prices are just surging because of a supply shock and it's not about some robust demand. I think it still remains at a somewhat comfortable level. It's going to obviously create a little bit of pressure margin-wise on some businesses and consumers, but I keep pointing out crude averaged around $100 in the early 2010s in a much weaker and smaller economy when consumer incomes were a lot lower. So to me, it's not yet at that point where it says it turns the economy or really turns back the recovery. But without a doubt, it's a boon for the sector because there has been underinvestment. There is capital discipline right now in a lot of the traditional energy producers. So, it seems like we're at a level where it's not really a zero-sum game with regard to the rest of the economy.
By the way, we continue to recover here. The NASDAQ has gone positive. The Dow is only down 250 points or so. A number of the sectors in the S&P 500 have turned green. Consumer discretionary, utilities, industrials, and energy has been green all day. Part of the NASDAQ story is Tesla, which is surging today. Shares rallying more than 6% after Bernstein upped its price target on Tesla for the first time since last August. It's up almost 17% right now. The price target now from Bernstein, $450. Reiterating its underperform rating, though, on the stock, saying it still believes risk-reward at current levels is unattractive. But the firm did concede that based on other high-priced growth stocks and given Tesla's unique growth profile, Tesla's valuation may not be unreasonable. Barron's, by the way, also pointing out in a piece today that many investors believe rising oil prices will be a boost, potentially, to Tesla. Barb, what do you think of that call and the move today?
Well, I think it's not a short-term call. I think, as you know, I have not been in Tesla because of valuation and have missed it along the way. But what I do think happens over the longer term, Tesla will continue to climb higher. I think it has to grow into its valuation. But when we look at all the targets, both governmentally and autos around the world and all the ESG pressures, we are making a move to electric vehicles, whether it's cars or trucks. And Tesla is very well positioned. As the pie expands, they will expand. So I think longer run, if you're a holder, you just live through the volatility with Tesla. This particular call, though, I think is a little bit of a short-term, almost marketing call.